Good morning, America. Thank you for watching Taxes Made Easy. And it's Friday, so we're going to relax a little bit, but there's some very important topics, kind of scary topics that we're going to talk about today. And mainly because they need to be talked about. Um, Again, and then we're going to focus on profit and loss statements and just kind of walk through. We talked yesterday about some of the key components of a profit and loss. We're going to walk through some examples, how to put one together, and it's easier than you would think. A lot of people are intimidated. Oh no, profit and loss, it just sounds so complicated. It's not. So once we break it down, it should be a lot easier for you, and we're gonna really focus and home in on that today, as well as covering how the IRS covers other forms of income as well. So stay with us, and we'll be right back after this break. Welcome back, everybody, and thank you for watching us at here on Taxes Made Easy. So, just gonna go through the articles real quick for today, and some of them are a little scarier than others. But first of all, we're going to start with the scariest one: estimated tax payments. So we have estimated tax payments due coming up. So the IRS came out with another reminder for the third quarter. The deadline is September 16th, and that's because the 15th falls on a Sunday. So really, that is just over a week away, 10 days away. So if it's very important that you make these payments, and ideally it's 90% of the tax return on your 24 return, or 100% of the tax shown on their full 12-month return from 2023. And this is the hard thing, is we're going through the year. It's really hard to know if you wait till the extension to file your estimated tax payments. So this is why it's helpful to have multiple years, but also have accounting done at least quarterly. So not only do you know what's going on with your business, but you can stay on top of your taxes and make sure you're paying estimated tax payments. So it talks about figuring estimated tax, how to pay it. This is the big kicker. Avoid a penalty for underpayment. Current rate is 8% penalty on top of everything else. So even if you file and pay everything by April 15th, if you don't pay throughout the year and hit these estimated tax deadlines, it's going to be an 8% penalty. So again, very important that we make sure that we hit these numbers and that we get this taken care of. So it talks about more time for disaster areas, and then Arkansas, Iowa, Mississippi, New Mexico, Oklahoma, parts of Texas, West Virginia, Florida, Georgia, Kentucky, Minnesota, Missouri, North Carolina, Puerto Rico, South Carolina, South Dakota, Texas, parts of Texas, Vermont, and Virgin Islands have until February 3rd. So if you're not sure if you fall into those, just use this link, and this article will be linked to the article when we post it on our YouTube channel. So again, be very aware of what income is coming in. Make sure you're paying estimated tax payments on it. It's going to create a huge bomb that's going to surprise people come April 15th when they file their tax returns and they get assessed with this extra penalty. Before it was even lower than that, it went up, creeped up to 3%, and this year Congress jacked it up to 8%. 8% additional penalty on top of your tax bill. So another quick article, and this is something I'm not very familiar with, and so just figured I'd share it. This is an opportunity to get $1,000 savers match from the government on creating an IRA and starting an IRA up. So if you make up to $2,000 in investments into an IRA into a 401k type plan or an IRA, you can receive as much as $1,000 match from the U.S. Treasury. Now, the kicker here is that you have to fall into some, you have to meet income levels here. So, pardon me, for married filing joint, the limit is 71,000. And that's joint income. And for a single filer, it's 35,500. So you have to make it less than that to qualify, and the closer you approach that limit, it makes it even harder. I mean, I don't know anybody that's living well off of 35,000 today. But again, this is the government trying to get people to save money, even though they don't have a lot. If you do qualify, talk to your CPA, look into this, or if you have a 401k or IRA that you can contribute to. Now, this is an interesting article, and it's really got a couple things here. So this is going back to this Georgia shooting. So we just had a school shooting. It's a tragedy. There's no other way to put it. 4 people killed, 9 others. The shooter has been arrested. Now they just went and arrested the father, Colin Gray, 54 years old. He's charged with 4 counts of involuntary manslaughter. Manslaughter means while you didn't pull the trigger, you did something really stupid and reckless that resulted in the death of someone else. So it's really kind of scary. And legally, you only are supposed to charge the person that actually committed the crime. Manslaughter can extend this. So this is something that, again, is being extended to parents. This is the second time it's happened. Mainly for knowingly allowing his son to possess a weapon, knowing that his son had plenty of issues. He had been investigated by the FBI a year earlier. And so this is kind of interesting that it doesn't really detail what his father did. It's brand new. We don't know the details on this, but this is a new thing that's happening. And I'm kind of on the fence about it because charging innocence is a concern. And you can be an amazing parent and have a kid that just chooses to do wrong things. Parents cannot be held accountable for everything their children do. However, in Michigan, going with this, got a few links here. These are the other parents that were charged, husband and wife were charged, and they could get up to 15 years. Oh no, they got 15 years in prison in this brand new case where they went after the parents. And this is a 21 shooting in Oakland County, Michigan, and Oxford High School. So the details here, I had to read through this to get the details. And again, there's a lot of shame here for what they did. But when it really comes down to it, and I had to click through a few articles to really get to the heart of the matter here. They were texting you, and when he was looking, they were texting their son, don't do it. There's a lot of issues here. Here it says, Ethan, don't do it. They texted him before. He was searching for ammunition on his phone, and they said, lots of laugh. I'm not mad at you. You have to learn not to get caught. And then for the Christmas, bought this kid a gun. Now, if you want to go purchase your son a gun, okay, I've done that. But if he has mental issues, if he's seriously disturbed, if the FBI comes by and investigates him as a possible shooter, you need to keep those guns locked up. Apparently, in both cases, the guns were not secured. I support gun rights, but you need to be a responsible gun owner, which means keep your guns locked up. Don't ignore warning signs with your children. If you ignore it and hear, there's plenty of signs that the parents knew, they left town. to not be there when their son committed. I mean, this happened in this case, not in the Georgia case. Apparently, they were aware of what was going to happen. They didn't say anything. They didn't protect anybody, and it became a national tragedy. So, if you know about it, this is the definition of manslaughter: careless, reckless behavior that results in the death of others. And from what I'm reading, again, we know very little of what all happened here in Michigan. It looks like they were definitely culpable to some extent, which is why they were arrested, tried, and convicted. Now, it's kind of scary to think that you could be held responsible for your child's actions, but they're being held responsible for their careless and reckless behavior when it comes to their child's obvious proclivities or his dangerous behavior. I don't have a problem with that. So let's see what happens in Georgia. It should scare parents, but hopefully it scares people into being responsible firearm owners. Even if you buy your son or whatever a gun, have it locked up. You should have the key. And again, the more responsible someone is, take it out to go hunting or whatever. But when it comes home, it goes under lock and key again. And again, as kids get older and they show that they're responsible, etc., that's fine. But if they start showing worrying trends, pictures with blood and shooting, etc., whatever, you need to be involved as a parent. You need to alert authorities, do what you can to address your child's issues before it ends up in a school shooting. Unfortunately, this is happening too often and is very scary. I'm going to switch gears here. The news is all over the place. There's like 20 articles today. Every news outlet is talking about Hunter Biden entering a guilty plea in federal tax case. So he's avoiding a trial here, which that's his right to do. Absolutely no issue with that. And again, right before an election, he's avoiding a potentially embarrassing trial. So now, his attorney said Hunter put his family first today, and it was a brave and loving thing to do. I mean, it's did he do it out of love for his family, or they knew he was guilty and they didn't want all the salacious details coming out, which were sure to come because the argument is that instead of paying his taxes, he went and blew money on drugs and prostitutes and lived a very lavish, ridiculous lifestyle. Now, it's, again, I've commented on this, that it's very ironic that he owed all this money and the government covered for him for a very long time. There's probably a lot more in taxes and money that's flowed through his accounts and other accounts that he controlled that isn't being included here. But I do think it's good that, if any other citizen did this, they would be in jail. And so this is a very flagrant violation of laws for many years, hiding assets, blowing assets, just pretending like you weren't subject to the law at all. So again, he claims it was due to his addiction, many years of addiction. I mean, this guy had lawyers and accountants at every turn. If they really wanted to follow the law, they could have easily done it. One of the concerns here is that he might be doing it to get a pardon. So while President Biden is still president, but we're going to cover that when we come back because I'm out of time. Welcome back, everybody. And just wrapping up with this NBC News article about Hunter Biden pleading guilty. The other concern is that he might be angling for a pardon while President Joe Biden is still president. Whatever. I think it's a good thing. And I think he does deserve some kudos for avoiding all the cost and expense that goes through, and something that he's, in my opinion, clearly guilty of. And the judge accepted his guilty plea, and now it just comes down to sentencing and see what happens after that. Now, moving on, this is a Breitbart article. Now, this is a little early. It's not the official numbers yet. We should be getting the official job numbers for August, but again, according to ADP, it's only 99,000 jobs in August. So again, not good, very bad. I remember when Trump was office, if it was below 250,000 a month, the left was screaming bloody murder. So July's numbers were reduced down to 111,000, even further for July, and to have job growth come in at 99,000, and this is per ADP, is not good. It's a very unhealthy economy, labor market right now, and natural resources and construction added jobs. Manufacturing shed 8,000 workers, and then you lost workers in other areas as well. So not a long article, but again, very concerning news for our economy. So this is another concerning news, and this article is from CNBC. And we are facing very potentially a huge union strike that will affect up to 43% of all shipping coming into the United States. And if you don't think that's going to cause massive, massive economic damage, and so that's, you're kidding yourself. So that could impact 43% of all U.S. imports and billions of dollars in trade monthly. And so the ILA, the International Longshoremen's Association, is the union that's planning on striking due to an impasse with port ownership for a new contract. And one of the things they want is they want to stop automation. So getting rid of jobs due to automation, that's more important, more expensive that workers become, more incentive owners have to automate. But again, the union's trying to stop that, and also demand, again, more benefits and pay, which is typically what's going on. And so there's a Taft-Hartley Act here where the president can invoke it. President Biden has not, but has not invoked this act yet to stop a strike. And they can force people to go back to 80 days, but what do? They'll just do what's called a slowdown, a worker slowdown. Those report, used recently. So again, they're working, but they're going as slow as possible. And estimate that instead of doing the 30 cargo containers a day, it would go down to 8 or so. So they'd still be working, just much, much slower. Again, would have a huge impact on this. So this kind of gives you an idea of what the total impact. 60% of imports coming from the West Coast, and then from the East Coast and Gulf Coast. So the West Coast would not be affected, but the other two would, East and Gulf Coast. So again, would be very, very damaging overall to the economy. So watch out for that. So I've talked about this before, and I'm just starving here for some kind of details about this. Donald Trump is to create a government efficiency commission with Elon Musk, and this is from WorkSpy. So he plans to create this government efficiency commission to eliminate fraud and improper payments within 6 months of winning. So 6 months of its formation. So he says if he gets elected, he'll form it. It's one of the first things he does. And within 6 months, they're going to be cutting wasteful spending and fraud from the federal government. Could really help, but they need to be reducing the spending by trillions, not a few billion here and there. So Their estimate is that it cost taxpayers estimated hundreds of billions of dollars. Um, as a plan that, and you're never going to totally eliminate fraud. Fraud in the government is as old as time, but you can drastically reduce it, reduce fraud and improper payments. So again, it's been rumored. He's expressed support for it. He did so in his interview with Elon Musk, but I think this is the first time he actually, in another, an actual setting, he came out and, not with Elon Musk and said, look, we need to do this. So I'd love to have more details. I'd love to, again, one of my criticisms of President Trump is that he doesn't have enough details about his plan. So again, people excited about Elon Musk coming in and cleaning up, cutting spending. But again, sounds good, but where are the details? And they criticize Kamala Harris over that constantly. Where are the details? Same thing here. I'd love to see some more details, but at least he's talking about it. So I'm going to stop sharing for a second while we turn. So because one of the big things the government is horrible at is managing their budget. We're overspending almost $2 trillion in the current year, and expected to go higher in future years. And it's nuts. But one of the big things that we help people with that are self-employed. So if you're W-2, there's times we sit down and we say, hey, let's do a budget. Let's see where your money is going. And people get surprised sometimes. Oh, that's what I'm gambling. I'm spending too much money on clothes. I'm traveling too much. And they take a hard look at their budget and say, okay, what will the IRS allow? Sometimes they ran in their budget. Sometimes they say, oh, well, I don't want to change my habits, but at least I know what I'm spending it on. And they'll do an installment agreement instead of something else that they might qualify for. So it's important, one, to understand where your money's going and what kind of money you have coming in. So I've sat down, I can't tell you how many times, with individuals and worked out profit and loss statements. It's easier than you would think. A lot of people just kind of glass over. They have an out-of-body experience. You go, oh no, what is this? He's talking gibberish to me. It's really, you're comparing the profit in the business to whatever expenses are in the business. And so whatever is remaining is your net income or net profit that gets attributed to you as income and gets taxed as income. So it helps you report these numbers accurately. And if you don't report it, a lot of times the income is reported to the IRS or the states, and they'll figure out your taxes for you in the worst way possible. And sometimes with the states, you're going back 20 years or more. And so unfortunately, if you don't have any expenses, you don't have any information, it's very hard to contest and file original returns if you wait too long. So we help people get right with the IRS, get on track to avoid issues. I was talking to a client yesterday. She had a little side business. She had a gambling issue. And she finally got her, we had her all set up, ready to put her in a hardship status. And then she missed the extension deadline on April 15th. Because of that, everything ground to a halt. We couldn't get her tax return in. And I was talking to her yesterday. And I said, what do we need to do now? I was like, you're going to file your tax return by April 15th, 2024, right? You could already start putting your numbers together. And she laughed. I said, don't laugh. We don't want to be right back here in a year's time, or less than a year's time. I said, well, file it by, and she goes, well, you know how I am with deadlines. I said, well, then set it for February. Set the goal for February to make sure you have it filed by April 15th. And then we talked about estimated tax payments. You can't really do estimated tax payments if you don't know what your income is. So being on top of your bookkeeping, being on top of your numbers is so important. And it's important for that you understand these things. So a lot of people, they just shove everything at a bookkeeper and CPA and say, figure it out. Just tell me how much to pay and I'll figure it out from there. And there's plenty of CPAs that they do the numbers, they put things together, and then run with it. So it's like, okay. They'll put the numbers together and they'll just give it back to the client and say, okay, here's your profit and loss. But they really won't guide them as to what's going to happen, how to make these estimated tax payments, the consequences of not making them. So again, it gets to the point where they need someone to guide them, to help them understand why it's so important and how this can help them improve their business. So it gets very frustrating for people, and I see this time and time again. I've seen people that were excellent at what they did. They were excellent plumbers, metal workers, electricians, whatever, but they're not excellent bookkeepers. It's not their forte. I'm not a bookkeeper. I hate that stuff. So I don't do it myself, but I pay to have someone do it. And then I review those numbers to say, okay, where are we? What are we looking at? How do we actually take a solid look at the numbers and figure out where we are as a company, where we've been, and where we're going. So I'm going to stop talking so much, and we're going to start looking at some examples here. So yesterday we talked about the main components of a profit and loss. Number one thing, time period. Number two thing, income, total revenues. And number three, expenses. If you don't have any income, the business probably isn't going to last that long. So we're going to just kind of jump into here and look at some samples here. Let me pull this up. Now, this is the first example here. This is a very simple thing. So it goes profit and loss statement template. It's just a template. Your name, your address, phone number, email, whatever. If you're using this or sending this to anybody, if there's any questions about it, again, they should be able to get a hold of you. I don't like this. It says for the period ended. So typically people are going from January to such and such date, but you want to state that. You want to be clear because you might want to look at a profit loss for just the second quarter. So then it won't start in January. They'll start April 1st. So, but again, very basic here. Income, sales, services, other income, whatever income coming into the business, you tally that up. And then expenses, if you have accounting, advertising, expenses for small assets, bank charges, cost of goods sold, and then total expenses. Then you subtract the income, subtract the expenses from the income to get your gross profit. Sounds simple. We're going to look at some other examples here. So this one actually has numbers in it, so hopefully it'll make a little bit more sense. Again, these are samples, but it says period ending 12/31/2019. It doesn't say the start period. So that's being a little bit particular at my end. But if your business doesn't start until later on in the year, or if you don't want to look at that, you should have a start and end period. And why do I hammer home on this? Because if you submit it without a start period, the IRS is going to look at it and say, what's going on here? What's submitted on your Schedule C on your tax return will be assumed that it runs throughout the year. And typically, it covers all the income throughout the year. But for your purposes, and if things are changing, you want to be able to look at it quarterly. And if you're using QuickBooks or any other kind of program, they'll just pull all that information, put it in a profit and loss statement, and make it so much easier for you. So sales, services. So here's the income, sales, services, other income, very similar. And then they have non-recurring expenses. So furniture, gifts, others. So these are one-time expenses that just happen to fall in that month. ongoing expenses, salaries and benefits, rent expenses, operational expenses. Here's one, depreciation cost, subscriptions, administrative expenses, other. So they take the gross income here, and the way they're doing it here, it gets added here at the bottom. Then the total expenses of 72,000. Now they're doing the tax amount. So the tax amount is just gross income minus expenses. So they get a little bit more complicated here. Doesn't have to be this complicated, but this is tax amount is just the income minus expenses. And this is your earnings before taxes. Now they say net earnings is after tax rate. This is if you're getting taxed as a corporation. This, again, you can make a profit and loss as complicated or simple as you want. I have, true story, I can't tell you how many times I've walked, someone that was a trucker or someone that had a side business, and I told them, just take paper and pencil. I don't care. Ideally pen, whatever. But you can put it on a piece of paper and the IRS will accept it. They might ask for bank statements to support it, but if it's a simple statement, you literally can write it out on a piece of college line paper or just blank paper, ideally at least has lines on it, and create your own profit and loss. And it doesn't have to be complicated. It's just something, you don't have to have a bookkeeper do it. The more complicated it is, you might want to have a bookkeeper do it. So I want to jump to this one, and I like this one better. I'm just showing that they come in all shapes and sizes. Oh no, I want to go back. Sorry. You have to be very careful here, because even though this looks like it's billed for filing and paying taxes, and you have to be careful when you do a profit and loss and you're in collections, there could be some of these expenses that they do not allow. Depreciation cost is a big one. Why? Because it's not a real expense. It's something Congress has passed to encourage businesses to invest, but it's not a true cost, as in it's not money coming out of your account. So they very possibly will look at this and say, okay, salaries and benefits, they usually ignore those. Rental expenses, as long as you're paying them. Be careful here, though. I'm holding my head, because I've had cases where people are living in their office space and they're trying to write off what they're using for personal expenses for business expenses. This is a huge red flag. The IRS has seen it plenty of times. They know all about it. And it's a huge red flag for audits, to get audited. So if you're claiming a home office, make sure that the space that you have, you don't use for any personal reason at all. You don't have a bed in there. You don't have a TV. You're not using it for a lounge room / office. If it's used for personal reasons at all, it's not going to qualify for an office expense. So you have to keep it separate and use it separate, just for office or business reasons. You can use it for storage. You can use a closet for storage or whatever. And you only get a write-off the percentage of your home that is just solely used for business expenses or business purposes. So watch out for that. Again, I had one guy said it uses the break room, which was just a kitchen. I mean, he was renting a home, a normal home, and he slept in it. He lived in it. He was using it for personal purposes, but he tried to categorize the different areas of his home. The living room was the client meeting area. I'm just like, you've got to be kidding me. All kinds of problems with that. So subscriptions, if they make sense, administrative expenses, they will go through and question some of these things. And one of the worst things you can do, and we're out of time, so we're going to take this break right now, and then I'll get right back to that. Welcome back, everybody. And we're talking about profit and loss statements. Yay! But we were looking at some of the expenses to be aware of, and I kind of ran out of time a little bit on that last one. Um, it's uh, yeah, nope, that's not the one we were looking at. Here we go. And there's things that you've got to watch out for. So depreciation, um, make sure your rental expenses are whatever space you're using is not being used for business expenses. It's just personal expenses. Administrative expenses, they might look at food and disallow some of it. And one of the big mistakes, and that you have to be very careful here, is that you do not mix um, personal with business expenses. You can write off travel, you can write off meals if you're using them strictly for business. If you're traveling, if you're having a business meal, but even then you have to track it, and not 100% of that is deductible. So again, they're not going to allow for the full cost of those on a profit and loss as well. Moving forward here, there's another example of a profit and loss statement. And I like this one because it has small business profit and loss statement template, self-employed, restaurants, a monthly profit and loss template, quarterly. So if you want to go to these websites later and take some time to just go through, there's a rental profit and loss statement. This is very helpful. So I just want to look at a simple profit and loss template. And this is in the hundreds of thousands of dollars. Most businesses are, small businesses aren't making this. But look at this. I love it. Starting date, ending date. It's so simple. Doesn't have to be complicated. And I like how they split up revenue and expenses. Most of the time, it's just on one line. If you do QuickBooks, it puts everything on one line: revenue, and it gives you a total number, expenses, and then it gives you a final number. So it looks like this. It typically looks like this, but again, it doesn't have this tax amount. That's a little funky and confusing down there. So, but this makes it very easy to see what's going on. So sales revenue, other revenue, you get the total revenue. This is the total revenue for the business. Cost of goods sold, $84,762. And then your gross profit. So this is gross revenue. If you have expenses that you have to pay for goods, you get to subtract that directly out. And most, instead of including it as an expense, most P&Ls will do it beforehand to get, here's your total revenue, gross profit. I know, a little more confusing. If you don't have, if you have a service that you're providing, you're not actually selling goods, it's treating it a little differently. But here they have wages and benefits, rent, mortgage. Again, make sure it's used just for business expenses. Utilities, office supplies, internet, phone, travel, insurance, interest. Depreciation, again, watch out for this. Taxes. Now here it's showing that they're paying regular taxes. So I'd be interested to know what kind of taxes. Normally that gets figured out afterwards, and it's not counted as an expense because it takes away what's actually. So when you're paying taxes, you're paying it on your total income. This is used to reduce taxable income. So property taxes, sales taxes, there are other forms of taxes that, yes, you can put on there, but not federal taxes. But if payroll taxes should be included in wages and benefits as well. So other benefits, so other expenses add in here as well. You should have some kind of breakdown on a separate sheet of what these other expenses are. You take gross profit, subtract out total expenses, and you get net income here. Similar thing. It's not rocket science, but at the same time, it can be very intimidating. I want to take a quick look at their rental property profit and loss template. So this looks really complicated, but what you're doing is they're taking it month by month. Here's the number of different properties, revenue per month, total revenue per month, and they bring it up. additional revenue, application fees, laundry, etc., whatever they're charging them, and then they get their total revenue. Then cleaning fees, landscaping, utilities, property management fees, HOA dues, advertising. There are plenty of fees for owning and being a landlord, and too many people don't track them. So one-time expenses, they have different, mortgage payment, real estate taxes, building equipment, etc. So you have 46,000 here, 74,000, and one-time expenses. And again, then it looks at deposits. I mean, this is only a snapshot of it. I have taken this, so at the top you have gross revenue, total expenses 120,000, net revenue of 45,000, and this is what's cash in the bank. I don't like how they did this because this takes a total amount. If you have 4 different, so here's property IDs, this tells you overall is your rental business succeeding or not. I've had to sit down and go property by property. So do a separate property profit and loss statement for each property. Why would you do that? Because some properties can be profitable and others cannot be profitable. And the question is, you have to look at each property and say, okay, can I make some adjustments? Can I get some more tenants in here? Is this a short-term situation where the property is normally profitable long-term? But I've sat down with landlords and say, okay, what makes sense here? Which properties are costing you an arm and a leg and is not going to take care of you? And I've helped them get rid of losing properties so they can support and better provide for better properties that are actually earning them money and supporting them. Collections does not care about losses. I touched on this yesterday. So if you have losing properties that are dragging down your overall portfolio, they're going to look at that and say, okay, we're not going to count the losses against the profits. You can for your tax return, but when you're in collections, it's different. So if you have multiple businesses here, some are making money, others aren't. The IRS is not going to allow for those expenses. And be careful here. If you have a business that's losing money every single year, classic example, someone has a bookkeeping business and they write everything off and claim a loss every single year to offset their husband's W-2 income. True story. They claimed a loss for 8 years. So what did the IRS do? Of course, they audited because there are tons of red flags, and this was years ago. So they got audited, everything got reviewed, and they pretty much told her, look, you either have to close down the business or show a profit. One of the two. Because if you don't, what they can do, and I've seen this happen, is they'll treat the bot. If you're losing money every single year on it, you're not running this business for a profit. You're not trying to be profitable, and they understand that new businesses typically lose money the first few years. That's understood. But by years 4, 5, 6, if you're not turning a profit, they can classify the business as a hobby. And what happens when you classify a business as a hobby? Go by expenses. None of your expenses will be counted because you're doing this as a side thing. You're doing it for fun. So there's plenty of people that run businesses, side businesses, but it's something they enjoy doing. They might make a little money off of it, but they're really doing it for fun. And they're not serious about making a profit. So if you never show a profit, the IRS can disallow all of your expenses. There's a case where it was a farm, and it was showing a loss consecutively year after year after year. And they were trying to turn it around. And I've seen it on horse ranches where they had losses year after year, and they said, look, if you don't straighten this out and start showing a profit, we're going to treat it as a hobby. Once there's a hobby, it doesn't matter. You're going to get taxed on the full amount of income, the total revenue, with no expenses. So instead of having $45,000 in net taxable revenue, you would have $166,000 and gross revenue and have to pay taxes on that. That makes a huge difference and really hurts people. It's a way that the IRS shuts down unprofitable businesses where people are writing off expenses year after year. If you're going to run it as a not-for-profit, run it as a not-for-profit. You can do that. But again, you have to follow different rules for that. So be very careful. So the last profit and loss I'm going to share, I like this. So this is year ended December 31st. This is what you should be looking at long term. You know, if you have a simple business, you shouldn't feel like this is where you need to start. But the longer you work with the bookkeeper, the more you get your numbers down, the more you can look at income year after year and see, okay, what do I need to improve on? Where are my expenses? How do I improve my business? If you don't have good information, you're flailing in the dark. So again, this is 15, 16, 17, 3 consecutive years. You can see, okay, this is my total sales year after year. Net service sales, we've slowly increased it, and so total net sales have gone up. The cost of the sale, so marketing, what did it cost me to actually get the sale? What happened? I think I just lost that. Oh, that's frustrating. Okay, we're back. Sorry about that. I clicked on the wrong thing. Cost of sales, fulfillment, marketing, technology and content, general administrative. Now you have to understand when you're talking to the IRS, they are not CPAs, they are not bookkeepers. So this needs to make sense to them. That's why it really helps to have someone explaining this to them. So here's your net sales, operating expenses, interest income, interest expense, how much you're paying in interest, other income, total non-operating income or expense, income before income taxes, what you're allowed for income taxes. And so this is just another way of breaking it down. And you don't have to have all this stuff at the end. So it gets a little bit, again, if you're having this kind of income, this is just probably one person working. Oh no, this is in millions. So for Amazon.com. So, but for your personal taxes, ideally, you get year after year, 15, 16, 17, and you can compare it. You don't need all this complicated stuff at the end. This is for a larger corporation. But this is their profit and loss statement or consolidated statement of operations. When they submit a profit and loss statement to the IRS, it's going to be pages and pages of stuff. So ideally, you have multiple years. You can compare it, and it will help you long term prepare for and plan not only to improve your business, but on tax saving strategies as well. What you don't know can really hurt you. And again, I think it's, if you're intimidated by a profit and loss statement, how to report your business income, how to get it right, make sure that you can understand what's going on with your business, give us a call. We work with bookkeepers across the country. We work with CPAs across the country. We have excellent contacts that can help you figure out how to handle your business, how to make sure the numbers are right. And for self-employed individuals, even if you have a side gig, it doesn't have to be crazy complicated or expensive to get good numbers and know exactly what's going on with your business. So I'm going to finish up here with another, just a reminder, September 16th. So 10 days away, third quarter estimated tax payments, get those estimated quarterly payments in. And it's going to be important to stay on top of that as we move forward. Again, if you have any questions, give us a call at 520-485-7371. We will walk you through doing a simple P&L. And if it's more complicated, use a bookkeeper. But when you get those numbers back, you should sit down and go over it and have them explain where they put the numbers. If they had good information, educate yourself on how to be a better business owner, and will help you save you in spades down the road. So again, You can also find these videos on our website at guardiantaxlaw.com. The YouTube channel is there. You'll be able to click on these. These are usually posted within a few days. And tomorrow we're going to cover other forms of income and other things to be concerned about with the profit and loss statement. So stay tuned. Well, actually, it's not going to be tomorrow. It'll be Monday. So again, if you have any questions, give us a call, 520-485-7371. And hope you have a great weekend. Relax a little, step away from the crazy news. And, as we prepare for this next tax season, go ahead and get your returns filed. There's no reason to procrastinate. Get them done, get them submitted. We have so on September 16th as well as the deadline for business returns. And so get on top of this, take care of it so you can breathe easy and have peace of mind as we deal with your taxes like a boss and make your taxes easy.